Mr Speaker. I rise to speak to the Taxation, Tax Administration and Remedial Matters Bill. The Green Party won't be supporting this bill. This bill has a couple of elements that we don't particularly like, and I want to just talk about those briefly. We'll obviously be very closely following the Select Committee process. Maybe it might be that during the Select Committee process our minds are changed, but we'll see. Mr Speaker, there's two kind of key elements that I want to talk about. The first is around the information sharing and some of the privacy elements around this bill. This bill does enable greater information sharing, and we do have concerns about some of the privacy elements of this bill and whether the privacy of individuals will be affected as a result of this bill. The second concern is around the abolition of gift duty, which has been canvassed at some length already tonight. What I wanted to talk about briefly was the regulatory impact statement, because obviously there's going to be a very lively debate about to what extent this bill really does affect tax avoidance. But what the officials are telling us in the regulatory impact statement is that basically they don't know. If you look at paragraph 64 of the regulatory impact statement, they say concerns about the potential for income tax reduction as a direct result of gift duty repeal are not possible to quantify, particularly because the extent of protection currently offered by gift duty is speculative. So what the officials are telling us in the regulatory impact statement is that if this bill were to proceed into legislation and gift duty were abolished, it would be very hard for us to know to what extent income tax would be reduced. And this is one of the unknowns around the action of gift duty. We know that gift duty does act to some degree to avoid various tax avoidance practices, and certainly has in the past. And the abolition of gift duty thereby, one would think, would open the spigot to some degree of tax avoidance. To what degree is actually unknown, according to the officials. What we do know, however, is that there is tremendous activity currently to avoid gift duty, and the way that's done, according to the regulatory impact statement, is through the use of gifting programs. And just to quote from paragraph 25 of the regulatory impact statement, it says, gift duty is easy to avoid through the use of gifting programs. Under a gifting program, an asset sold at market value in exchange for an interest-free on-demand loan for the value of the asset. Legal title to the asset instantly transfers, but no payment is made. The interest-free on-demand debt that the recipient of the asset owes to the donor is then progressively forgiven by the donor at the rate of $27,000 every 12 months, which of course is the level currently at which gift duty kicks in. The forgiveness of the debt constitutes annual gifts, however they are within the accepted level, so it do not attract gift duty. Until it is completely forgiven, the debt owed is legally an asset of the donor, and the donor can demand that it be repaid. These gifting programs, just quoting from the regulatory impact statement, these gifting programs are widely used to transfer large assets without attracting gift duty. The fact that just 0.4% of gift statements received by Inland Revenue result in liability for payment of the gift duty is clear evidence of the widespread use of these programs. And finally, it says they are most often used by individuals to transfer ownership of their assets to a family trust. So what we're seeing at the moment is that gift duty is having a very significant impact. And the impact of gift duty is that individuals are structuring their financial affairs to transfer assets into family trusts, but doing it in a way so as they don't have to pay gift duty. What this is strongly suggestive of is that there is a tremendous thirst out there to transfer assets into family trusts. The fact that 99.6% of all gift statements do not result in liability for payment of gift duty shows that in the vast majority of cases, assets are being transferred, according to the officials, individuals are transferring ownership of their assets to a family trust. If we remove the gift duty, then we will open the spigot on this process. Now, you could argue that the gift duty is not currently working, and I think that would be a fair argument. But then there's two responses to a tax which is currently being avoided. One is to change the tax so that it can't be avoided, and the other is to give up and put your hands in the air and simply say, oh well, the IRD gives in because we aren't going to tighten this rule. Now, the government has chosen in this bill that it's basically adopted the surrender approach. It says, well, look, this gift duty's here. It did have a purpose, which was to try to find a way to tax the movement of these assets as they moved into these family trusts, but it's basically being avoided. So what the government's going to do, therefore, is abolish gift duty. There is another response, which is to go, how could we close this loophole? How could we actually try to reduce the level of tax avoidance? Now, the second issue that's come up is that since the changes in the tax rates, there's been an alignment between the trust rate and the income tax rates. So arguably there is lower incentive for individuals to use these mechanisms to try to avoid paying tax, because previously there was a differential between the highest tax rate and the trust rate. And so there was an incentive for people to slowly move their assets into these trusts to try to avoid paying the full rate of tax. And so the one argument would be that with the alignment of these tax rates, there's no longer this incentive. The problem is that there is a problem in tax avoidance operating around trusts, which will continue to operate even with the alignment of the tax rates. We have a problem with the trust law, essentially, because it's very, very difficult for the IRD, or for anyone else for that matter, to get a very clear perspective about what is happening inside family trusts. They can operate it's very difficult to see through them, and so it's a classic way that's been used a lot in New Zealand to minimise tax payments or to run tax avoidance schemes. And currently what gift duty provides to the IRD is that even in the worst case scenario there is a paper trail to what's going into the trust, so that the IRD has some record of the money that's pouring into those family trusts. Now, if we are to abolish gift duty, and so we don't have any incentive anymore for people to arrange their affairs in a way that over 99% of them don't pay gift duty but at least alert the IRD to this money flow, then we will reduce the level of intelligence that IRD has that is operating around the family trusts. That is, we will make it easier for people who know how to operate these systems to avoid paying their tax. And for that reason, that's why the Greens have a concern about this. It should be put in context, of course, that we have had a series of tax changes which have benefited those at the upper end. I mean, it is a matter of public record that the tax cuts that were introduced, 40% of the tax cuts went to the top 10% of income earners. So we are operating in a context in which we have already made very significant changes to our tax system which have overwhelmingly benefited people who are on the incomes like the incomes of the people in this room. We are the major beneficiaries, in fact, of the tax changes. Of course, the CEO of Westpac New Zealand is an extremely major beneficiary of these changes, as are high wealth individuals. So in that context, do we want to change the gift duty and get rid of this attempt to control this flow of money rather than try to actually tighten it up? That's what the challenge is before us. Do we try to close the loophole, or do we just give up and surrender? And what this bill says is we should give up and surrender. Now, the Green Party doesn't think that that's the way, that we should be amending our tax system. We don't think that the broader context in which we're operating, which is to make the tax system more hostile to low-income individuals, is really the way that we should be changing the tax system. We would, for example, the Green Party would support a capital gains tax excluding the family home. We think that's an important missing part of the New Zealand tax system. And earlier on, Mr Cunliffe talked at some length about the need to ring-fence losses coming out of LAQCs. So there are a number of ways that we could improve the tax system to make it fairer. Getting rid of gift duty is not one of them. And, well, we will be listening closely to submissions at Select Committee. We won't be supporting this bill at first reading. Thank you.